Hello guys, this is fairbinaryoptions.com. It is Saturday the 15th of March and we're looking at the Euro-Japanese yen. Like the name suggests here, it still feels heavy. What does it mean heavy? Well, it is, let's say, at least fishy in this situation. I would say that a lot of buyers are stepping in around this area. The reason being the fact that this area is proving to be one area that has in the past acted as a resistance or support level. As you can see, even when price coming from here, moving to the upside, broken, and then it is support, and then support again, broken, and then resistance, broken, and now normally it should act a bit of a support. However, I would say that on the short to medium term, so I'm talking about next week, I would say that this area is bound to be broken, and the target to the downside would be no more, no less than the amplitude of this move here that also acted as an important area. So I would say that a move into the 39.50 or 39.70 area is bound to come. Now, coming back to our strength here, and this being Elliott waves labeling, from the absolute highs here to the absolute lows, but not the very absolute lows, but to these lows here, I would say that this is the classical corrective wave. What kind of a corrective wave? Well, here, as you can see to the downside, this is a triangle that goes A, B, C, D, E. But if you're looking at this triangle here, so A, B, C, D, so the D wave ends here actually, not here at the highs. So the triangle goes like this. And like this. And therefore it means that the whole wave or the whole structure ends at this very moment of time, not at the absolute lows, but at this very moment of time. Here on the other hand, to the upside, we have a classical 1, 2, 3, 4, 5. This is a fifth wave extension as an impulsive move that is coming after an ascending triangle. This is the ascending triangle. As you can see, price is forming a series of higher lows here. So after this ascending triangle, we have a fifth wave extension to the upside, and that means that the previous move ended here. So from these highs on the right side, I would say we have a corrective wave, as this is no impulsive move, that ends here. So definitely this is a three-way structure. Let's write here on the screen that this is a three-way structure. I'm not even going to label it because it doesn't really matter at this moment of time. We are trying to play a bit a game of logic here. So this is a three-way structure. Excellent. Now, if this is a three-way structure that ends here at this moment of time, what I would really like to know is to see the retracement level for this three-way structure, because the retracement level actually will tell us if this is going to be a flat, what kind of a flat is going to be. If this is going to be a triangle, what kind of a triangle is going to be. So this is the retracement level. Now this is 61.8, and I would like to add another value here. Let's try to add the 80% if I can find it. Okay, let's look at it, edit the levels, and we have 23.6, 61.8, 50, and let's try to put in percentage wise here, not that one, let's try to put this one 80. Okay, so we have the 80% level. As you can see, the move to the upside is actually not breaking the 80% level, so it means that this as a potential B wave, so this is wave A, and this is a potential B wave. So this as a potential B wave is actually going no more than 80%. This is being called a weak B wave, or a B failure if you want. Now, the B failure is very nice in the sense that by the time price ends the B wave, so let's say that this is wave A, this is wave B, and now we are looking for the C wave to the downside. But it is also possible that prices makes a double failure. It means that the B wave fails to retrace above the 80%, and the C wave here fails to retrace the whole move. I would say that we have all the chances here for price to make something like a wave A to the downside, and then a B wave to the upside as a complex corrective wave, but this to still move a bit here to the downside. On the move to the upside, I would label it in the following structure. I would say that most likely here, from this moment of time till these highs, I would say that we have a nice first wave as a wave A, the B, and then a 5-wave structure to the upside, so A, B, C to the upside like this. But this C wave to the upside to be an impulsive move that actually ended here. So this to be 1, 2, 3, the fourth wave here. So 1, 2, 3, the fourth wave here with the form of a flat, A, B, C, the irregular flat, and then the fifth wave failure here. Then what to look to the downside? We are looking now to the downside for a 5-wave structure, and this 5-wave structure to go something like this. 1, then the second wave here should be the most complex one, as I'm targeting a first wave extension, or at least a terminal impulsive move in the form of a falling wedge. So 1, 2, then the third wave, the fifth, and then the third, the fourth, and then the fifth wave there, and this should be our educated guess about what price should do. So long story short, what I would like to do here is to still buy put options by the time markets are going to open on Monday, with the expiration date being end of week next week, and from that moment on to look to the upside. So let's write that we are buying or looking to buy put options with end of week expiration date, as markets normally should move into that direction for the rest of the week by the moment that we're going to open the markets on Monday. Still a feeling of a risk off in the markets, so let's see what the markets will do. Thank you very much for being here. This is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor here, Lioneye. Bye bye.